My name is Terry Ross, and I'm the Director of the Center for Corporate Sustainability at the Haskayne School of Business. Welcome to the Enbridge Research and Action Speaker Series on sustainable finance and Alberta's role in Canada's energy transition. Now, before we dig into this engaging topic, I have some important acknowledgements to make. The University of Calgary gratefully acknowledges that this event is not only being held in cyberspace, but also on the traditional territories of the people of the Treaty 7 region in southern Alberta, which includes the Blackfoot Confederacy, the Tsuut'ina First Nation, and the Stoney Nakoda. The City of Calgary is also home to the Métis Nation of Alberta, Region 3. Thank you all for joining us today. Now, before we begin the main part of today's event, I'd like to get our December 8th ARIA event on your calendars. It'll have an expert panel of CEOs from Calgary and New York, such as Curtis Probst, co-CEO of the New York City Energy Efficiency Corporation, Dan Balaban, CEO of Greengate Power, Janice Tran, CEO of Kinden Energy, and Nick Blitterswyk, CEO of UGE International. The panel will be discussing the financing of clean energy projects, and you won't want to miss it. So today we're discussing the market activities, structures, and behaviors that underlie sustainable finance and how they can be used strategically in business decisions, products, and services. Ultimately, we need to understand and develop capabilities to exploit capital market trends such as ESG, climate disclosure, and transition finance. And we need to know how to look at these trends as an opportunity and how to respond to these trends in an energetic, positive, and confident way. To guide us in this discussion, we are very pleased to welcome Andy Chisholm. Andy is a member of the Board of Directors of the Royal Bank of Canada. And prior to that, he spent most of his career at Goldman Sachs and Company in New York, where he served in a variety of senior leadership roles over his 30-year career. He is also a member of the federal government's expert panel on sustainable finance. Andy will present for 30 minutes, and then we'll have a follow-up with questions and answers. And if you have a succinct question for Andy, please use the Q&A function in Zoom and consider upvoting any questions that you like. Now it is my great pleasure to welcome Andy Chisholm. Andy, over to you.
Great, thank you very much, Terry. I really appreciate the opportunity and the introduction. I think probably for your audience, the last thing they want to do right now is tune in to another voice from Toronto. But I guess first I'll try to explain perhaps my background and the relevance to this discussion. And then secondly, try to go through some of the key elements that I think are most important for the discussion with regard to sustainable finance and my background on the expert panel, Sustainable Finance, and the relevance to the energy business in particular, but not limited to. And then finally, perhaps offer some comments with regard to the need and the opportunity for Canada and Alberta at its heart to demonstrate leadership in both energy and climate, as well as many other things that are going to lead to a very strong economy going forward. And my message at the highest level would be, I think I understand how bleak it feels when it feels bleak, and I'm going to come back to that. The markets, climate change and ESG, politics, all conspiring at once to make for a very difficult and sometimes toxic mix. With regard to markets in particular, I will simply say, as fast as you think it's all moving, it feels to me like it's in fact moving a lot faster. And I'm going to come back to that. It'll be one of the themes that I come back to. Also that COVID, if anything, to me amplifies this challenge. It's obviously all hands on deck right now to try to restore, recover from the disruption, and ultimately to find a way forward. But the market view remains, irrespective of COVID, that climate change has no vaccine. You can't self-isolate from climate change. And so these issues are going to persist and intensify. Further, though, I want to leave the sense and the strong belief that I have that if we accept the realities and if we turn adversity on its head and try to use the power of markets, after some pain, I think we can be in a stronger place and perhaps a much stronger place. But to do that, there's going to be a need to be incredibly strategic. So my background, I'll get to that first a little bit. I was 30 years at Goldman Sachs. I'm Canadian. I grew up in Toronto. After business school in Canada, I went straight down to New York. And I was with Goldman Sachs for 30 years in the investment banking business initially. And within that, I spent most of my career in the financial institutions business. And I ultimately ran it globally. And at the time of the global financial crisis, that was my responsibility. We, with perhaps no humility on my part, we had the strongest advisory business globally at that time, and we were advising all the dominant leading institutions around the world, which all hit the global financial crisis. And the impact of that was profound. And I'm going to go through some of the implications of that, because I saw firsthand how politics, public opinion, and subsequently a regulatory shift would move, and would move so dramatically and inexorably that it made it very, very difficult to do business. Capital, liquidity, stress tests, huge new investment required for compliance were all imposed on the industry, along with massive disclosure obligations that had not been there presently. And fundamentally, with all that capital and extra liquidity and so on, ROEs fundamentally shifted in the business, halved or got cut in third. And the capital markets very quickly responded and started focusing on who was able to understand these issues, accept them, embrace them, and who was resisting, and demanded a lot with regard to plans and expectations, with regard to how each individual institution was going to move forward. Subsequent to my being in charge of the financial institution business, I was in charge of strategy for Goldman Sachs globally for a period of time post-crisis, trying to figure out, with this massive shift in public sentiment, shift in politics, shift in regulations, shift in customer attitudes, how to align the future strategy of the business. And it took a lot of very tough decisions to take a look at previously sound businesses and recognize the fact that they were no longer so attractive, to seek new opportunity that had arose, and to come to the realization that far from fighting the capital market trends and tides, that it was to the benefit of getting ahead of this issue and trying to master the new regulation and the new expectations put on the industry. And the market very quickly figured out who was taking that stance, who was looking forward and trying to embrace the harsh reality and maximize the opportunity from that point forward, and who was still at the point of trying to understand or resisting. And in a very tangible way, investors would come in and they'd say, you have new capital rules due by this date, you have new liquidity rules due by this date, you have new systems requirements, you need to massively increase your compliance. Where are you on all that? And if the response was, we've got a plan, we're making the investment, here's the investment we've made already, we have the right people focused on it, we have the best people focused on it, here's why we're optimistic, here's why we're going to, in fact, arrive at the necessary destination even before the regulations required us to. that was a recipe for a premium rating, a lower cost of capital, and tremendous industries capital market support. Those that resisted, and frankly, there were a number that in Europe in particular, where they took a lot longer to internalize the rules. They took a lot longer to master this. They were more sluggish in their response. They had a higher cost of capital, more difficulty raising new capital, less investor support, and even to this day, for many reasons, the market cap of Deutsche Bank is something below $20 billion, which is a fifth even of the bank that I'm a director of, the Royal Bank of Canada. And so in that context, I saw firsthand how industries that previously had been in very well-established patterns can go through massive stresses and the difference in trajectories of people responding to that. Once I retired from Goldman, as I said, went on the board of RBC, and I see things from that angle. By the way, my comments today are personal and in no way should be seen as a reflection of the bank. The bank speaks for itself. Having said that, as you'd expect, I think my comments are pretty aligned. Subsequently, I was on the expert panel of sustainable finance, as Terry mentioned, and I saw firsthand the implications for Canada related to this issue of sustainable finance, climate change, and the pressures building on our industries. I now also help out with a clean tech firm called Arcturn Ventures, and I see things coming from that angle as well. So let me go to the second chapter, sustainable finance. What is sustainable finance? What's the relevance to all of you? Well, in the narrowest sense, it involves integrating considerations of the risk and opportunity of climate change, and some would argue sustainability more broadly, incorporating other environmental and social issues than climate change, into the normal financial patterns, decisions, capital allocation, investment, such as investment lending, risk management, valuation, disclosure. So why is this deemed internationally to be so important, and why is it such a focus? Well, I think there's a general belief that climate change is real, it's urgent, and it could be devastating, not just in a physical sense, floods and fires and wind and all that disruption, but also in a social sense, and that it could be of a magnitude to be financially destabilizing. I think the view is also that it's up to the real world, the real economy to solve climate change. And if the financial system does not incorporate the risk and opportunity of climate change in a consistent manner, then the problem won't get solved, and the price of not responding will become unmanageable. Central thesis that what gets measured gets attention and what gets funded gets done. Therefore, the financial system needs to be aligned with that future. So why did, in particular, the expert panel get set up in Canada, and why did it have all the attention it did? Well, in brief, I guess our economy represents a massive long position on carbon and emissions intense industries in some ways. Energy, mining, ag, transport, real estate. And this is all at a time when a growing part of the world, certainly the investment community, is putting a massive short on carbon, with China perhaps arguably playing both sides of that trade. We have a huge concentration risk. Our GDP, our jobs, our savings are all to a degree tied up in the same stuff, and therefore we have tremendous financial risk. And it's imperative for us to find how we can become competitive in a low emission world. Decarbonization is fast becoming a major force in capital allocation, and we risk being blindsided. Capital is starting to flee certain sectors. I'm sure you understand what I'm talking about. And yet at the same time, we have so many ingredients to succeed and the opportunities to capture the same way that China is trying to. And if we focus and act collaboratively and strategically, then we can expand our opportunity set. We can expand our role as an energy powerhouse, but we can expand our role globally in many other ways as well. We have a choice to make. Do we want to be a maker of our future, accepting that a response to climate change is going to be central to that future? Or do we want to be a taker of other people's rules, with Europe in particular defining those rules for us and China eating our lunch? So what did the panel say, and what are some of the foundational elements of sustainable finance that are perhaps relevant to you today in the energy sector in Alberta? Let me go through some of that. First of all, we took a view that there's a real need to have a vision about where we're headed in this respect. Make the opportunity clear and the impetus clear, and provide some direction to act with a vision that incorporates relevant pathways, sector by sector, bringing together the private sector and the public sector and engaging people. Why? The simplest, if you don't know where you're going, you're certain to arrive there. You need vision that a system can coalesce around, both public and private and NGO. There is a need internationally to tie this into our net zero commitments, 2050, make it coherent, and to build a competitive economy that can adjust and be successful with the realities of the demands for low emissions. We need a vision that gives us a sense of what's possible and an idea of what it costs and where the money can come from. We need a vision that can create clarity for policymakers, as well as investors and regulators and the rest of the world, so that we can pool our efforts amongst the peers, spur ecosystems of innovation that are going to head in concentrated directions, and ideally a vision that can unstick the polarization. So we then had a second, that was the first pillar of our work, talking about that. We then had a second pillar, which got to foundations within the financial sector that needed focus, and it involved a number of different things. The first was data. Climate change and emissions data in particular is disparate, inconsistent, it's not joined up, it's not connected to financial consequences. And if you can't measure it, then you can't deal with it. So the relevance for you, as you well know, Alberta and parts of the energy business, in particular the oil sands, are being tarred, so to speak, are being misunderstood. So why do we need to get that data and get it out there in Canada? Because the presumption is to the negative. And many new data services are emerging to try to get at that climate change data, that emissions data, those other relevant statistics, Sustainalytics, BlackRock, other rating agencies that have bought companies. And in the absence of good data, they're doing their best, but in the absence of good data, they have to extrapolate. And many times they're extrapolating in a manner which is not accurate. And we're suffering from that. So data is an issue that needs to be harnessed by us. Second, disclosure. Good, consistent corporate data must be available for smart investment. And investors said to us very strongly, it's been too difficult to get the relevant information. And issuers have said, it's too difficult because too many questions are coming at us and most of them are not relevant. So the panel said we need efforts to harmonize and focus on what's important, We need to create a new disclosure regime that will allow investors to get what they need, and it must tie in with international efforts like TCFD and SASB and other efforts. The panel gave a specific suggestion for phasing a rollout of this disclosure, and the relevance for you is that it's really incumbent on us to show the story, show our energy story, show our broader story with regard to our response to climate change, our low carbon trajectory, and competitiveness ambition. There is no sense for us to try to hide, because we're in a position where too many aspects of the capital markets are not believing what we're telling them. We have to use the international demand for disclosure to tell our story, to show how far we've improved, what our plans are from here, what are our targets, what are our strategies, how is this being governed, how are we dealing with the risk aspects of this, and what sort of scenarios do we foresee and what are we planning? The third aspect had to do with fiduciary duty and the consideration of fiduciary duty in investments and framework, and whether or not fiduciary duty includes a representation and focus and inclusion of the risk and opportunity of climate change. And we on the panel said, absolutely, it should. This is a financial issue. This is not a non-financial issue. We also said we need to clarify and put frameworks together so that this can be dealt with in a sensible and a consistent manner. So what's the relevance for all of you? As you well know, ESG, environmental, social, governance considerations, and that manner of investing is going mainstream. Specialized funds are getting set up. Ratings companies are becoming very powerful. Indices for passive investing are being established, or investors are self-organizing into multi-trillion-dollar groups in order to act in a central manner. And why are they doing that? Because they're under pressure from clients and beneficiaries, but it's also proving to be a better way to invest. And it's that latter point that is causing the tremendous momentum towards ESG in markets internationally. You may like it, not like it, agree with it, disagree with it. It is a major factor, and it is very much on a roll. I'll come back to it in a second. There were a number of other foundational elements that we focused on. I won't go into those, but as a third pillar and a final pillar for the expert panel's work, we talked about what are the financial tools that can be employed and how can they be utilized and where should that capital go to? First of all, the focus was on fixed income, the biggest, deepest asset market. Within fixed income, we're all familiar with the notion of green bonds. And it struck us that while the notion of dedicated capital pools could be very powerful and useful for us, the notion of green bonds had the risk of not benefiting us, of actually disadvantaging us. Why? Because the rules were being dominated by the Europeans, and effectively the US voice was out of the game. And the Europeans, for many different reasons, centrally perhaps because they have different underpinnings to their economies, their focus is on pure green. And Canada's issue is much more about transition. And I know that word transition is one that evokes emotion these days. Consider it transition, evolution, transformation, however you like. Forgive me if I use a word that evokes a negative reaction from you, but it's a term that's being used very strongly internationally. And that's Canada's issue, transformation, evolution. And so we needed to harness the fixed income markets in a manner that could focus on that aspect and to fund the strategies that were headed towards the positive direction of evolution, transformation. And so the relevance for you is that in Canada, that work to create the underlying taxonomy, as it's called, the rules, what's included, not included, is it green, is it transition? Those rules in Canada are just in the process of being negotiated, discussed, debated, and nailed down. And this can be a very powerful tool. And I know that the voices within Alberta are very, they're a strong participant in these discussions right now, which is terrific. It's just what we need. But we need to nail these down, and we need to get it done quickly. And if we can, these are tools to utilize the fixed income market to help finance the tremendous capital investments that need to be made at a very low cost of capital. It is proving, these securities are proving to be in very high demand and therefore low cost, and ones that we can harness tremendously to our advantage. We then, second aspect of financial tools, we talked about equity and ESG in the broader asset management complex. And I gave some introductory comments before, but I think it's important that as we can feel uneasy about ESG heading in a misguided direction, a couple of things are important to say beyond the fact this is moving way faster than you would like it to, and we need to harness it and ride with it. But it can also be our friend. It is E, and frankly, we're quite good at many aspects of the environment. It is S, and we are probably one of the strongest places in the world with regard to social responsibility in many respects, not limited to, but certainly including Indigenous issues. And the G of governance is something that Canada is exceptionally strong at. So this is a tool where we can differentiate ourselves if we harness it and embrace it. Decarbonization is becoming a major force in investing, and in many ways an outsized aspect of this ESG discussion. It is affecting cost of capital in a really massive way. Some would argue that there is an implied carbon tax that is already being applied by the capital markets on our oil sands of a very, very significant degree. Something that stretches beyond $100 a metric ton. So this is something that we need to accept, we need to get behind, harness, tie it with the notions of disclosure, tell our story, and get investors that understanding it are willing to back us in our journeys from here. We then talked about on the panel, we talked about where should the money go to? And we talked about a number of things. We talked about energy evolution as a major chapter in this. And I'll come back to that. We talked about building the electrical grid of the future. We talked about infrastructure. We talked about clean tech. We talked about energy efficiency, and in buildings in particular, retrofit. All these things can be harnessed by Alberta, by you, in a very major way. Clean tech, it's obvious. The opportunity for IP, jobs, wealth creation, future competitiveness, industry by industry. Certainly it applies in a major way to the energy industry. That's something we need a national focus on. We need to concentrate our efforts on things that matter, and energy transformation is one of those things that matter. We need support for big capital intense scale ups. And again, the problems we're dealing with in Alberta, in the energy world in particular, are very capital intense. And we need in Canada to focus our efforts in that way. The electrical grid, obviously something where integrated energy systems become part of the transformation. And for us to master that integration in a very significant way becomes important. It is not just renewables as the new way forward. It is many, many aspects of this. And there is a role for existing fuels as well as for renewables, and massive opportunities for technology. And Alberta has huge opportunity in that respect. Infrastructure. When we talk about infrastructure, we think bridges, roads, but we also should be thinking about hydrogen infrastructure, charging infrastructure, LNG infrastructure. And if we get focused, and the panel was very focused on how do you create blended finance structures to utilize the public purse together with private capital to address these issues of infrastructure, but in a way that has an eye towards resilience to climate change and building our competitiveness and our ability to mitigate aspects of climate change going forward. So all these tools, foundations, and where the capital could be applied feels very relevant in an Alberta discussion. But as a last chapter to my talk, and then we'll open it up to questions, the comment or the question about how can Canada and Alberta lead in energy in a world that's moving to low carbon. It's essential. We are a powerhouse. We know that. But we rely to a large degree, not totally, to a degree, on extract and burn strategies that are very tied to emissions intense results. And we have very high level of reserves attached to that. And we're going to have to adapt and evolve to a strategy that is more an all the above kind of strategy, which is required on energy. Canada absolutely can and must help the world, and has many ways to do that, including LNG as an alternative to burning coal in China or India. But it's important to us to get this right and to have a vision that we're expanding the pie as an energy powerhouse. And in that respect, part of this will be new techniques on old stuff and trying to focus on the opportunities that we've already proven to move way further down the curve with regard to emissions intensity of our existing operations, but then take advantage of the huge opportunities in CCUS, carbon capture storage, hydrogen, biofuels, energy storage, other aspects of optimization within the energy system. And we're proving in many ways that we can do that, but this is not simply about putting out a statement. It is putting out a statement, but then massively investing in strategies to pursue what was behind that statement. And part of this requires an initial acknowledgement that things have changed and a recognition that big oil and Alberta have a huge role in addressing and adapting to that change, and a massive focus on the opportunity from here. The notion that is well known in Alberta of last barrel's the best barrel, which is a Canadian barrel, future fit hydrocarbons, that notion is a very, very strong notion. We need to be extremely focused on what does that mean. We need to be focused on bitumen beyond its current uses. We need to focus on carbon fiber, as well as CCUS and wind and solar and geothermal and minerals for battery storage and nature-based solutions, all of which Alberta has. Check, 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 check. The opportunities are tremendous. So let me end with a few thoughts that you may say, my goodness, there's nothing new. It's trite. Fine. Let me put it out there and say it is not new. If you've read Mac Van Welligen or other strategies, I'm conscious of announcements even in the last 24 hours that the province has come out with, which are pretty significant, very significant. I would say, number one, creating a vision and a strategy going forward, which protects Canadian interests, but absolutely embraces the reality of the economy, but the environment and the social realities here, and an ultimate objective to build low carbon competitiveness. It has to acknowledge a 1.5 to 2 degree outlook. Number two, seek national support for innovation. There is huge opportunity to capture the momentum, but I think that there is a real need to be strategic, but seek national support for the huge scale of innovation that's going to be required. Number three, establish a made in Canada brand for our energy and resources. Paris aligned, environmentally leading, socially responsible, strong governance. And then embrace disclosure. Rather than be fearful of TCFD, embrace disclosure. Use that strategy, number five, to align regulations and policy and incentives and support for innovation. Number six, design financing tools specifically for that evolution and that transformation. Number seven, try to negotiate international credit for the things that we're doing to help the globe. And finally, embrace the efficiency push throughout the country, and obviously ask for support for socially equitable outcomes, because there will be important and unfortunately significant disruption community by community. Not all will be winners. So I'll leave it there.
Thank you, Andy. On a note, just one of your first pillars there, I'd just like to point to the audience about the importance of vision setting. They might want to check out our discussion with Mariana Mazzucato from a week or so ago. That's very complimentary to a lot of what you're discussing there. Now I'd like to introduce the moderator for today's session, the Chancellor of the University of Calgary, Deborah Yedlin. Chancellor Yedlin was a colleague of Andy Chisholm at Goldman Sachs and Company back in the 1980s. She's been observing and commenting and writing about business and politics for more than 2 decades as a journalist for the Financial Post, Globe and Mail, and Calgary Herald newspapers. In addition to her writing, she's been a regular commentator on CBC radio and television and CTV since 1996. We're very happy to have her today. A reminder that you can submit and upvote questions in the Q&A of Zoom. So please help me in welcoming Chancellor Yedlin. Chancellor, over to you.
Thank you, Terry, and thank you, Andy, for that very insightful presentation. You gave us a lot to think about, and there's no shortage of questions. And of course, one of the first questions is about financing, and if Canada comes up with its own taxonomy for transition finance, what are the chances that others, in particular the EU and European financial institutions, would accept that taxonomy? Oh, you're muted.
Great question. Very timely, very relevant. I'd like to believe, maybe again with no humility, that the work of the panel, by the way, on the panel, in fact, chairing the panel, was Tiff Macklem, who's now governor of the Bank of Canada, and who developed some important views with regard to systemic risk during our work on that panel, and he's now in charge of trying to make sure that we protect ourselves from systemic risk. But in any case, also Barb Zahn and Kim Thomason. Our thought on the panel was that the EU wasn't doing it, wasn't focused on that direction. The US, as I say, did not have a voice at the time. And it was incumbent on us to try to force the issue and to create something that worked for us. And so a group got together. It has not finalized its work, but it got together very early, and it's been working hard. It incorporates industry, financial sector, NGOs, government entities, and the energy sector is very well represented. And the thought was try to create this taxonomy that can work towards evolution, transformation. We'd like to believe, again, getting back to the humility point, that the EU in their work has started to adjust their mindset and has started to accept the fact that this is an issue. I think that in their work, it is still too rigid, but it's heading in a direction, a constructive direction with regard to this. If we can get our work done and it being seen credibly internationally, and to have the people involved in that work being tied in simultaneously with the international efforts, which they are constantly in communication with those other international efforts, we will have something that works for Canada but is harmonized with the directions internationally. Initially, it may not be perfectly synchronous. It may not be perfectly harmonized, but it'll be a lot closer. And ultimately, the objective would be for it all to be a single global standard.
So one of the things you talked about was how decarbonization and the mindset of investors is affecting the cost of capital. And one of the suggestions is that we need to embrace disclosure as one of the ways to sort of address this. And also we need to measure progress. I'm just wondering how, we've heard Suncor talk about its net zero ambitions, Cenovus, Husky, but there's a lot out there in terms of what companies have committed to, but that's not going to get them to a lower cost of capital in terms of where we are today. What else do they need to do, and how fast do they have to move? Again,
tremendous questions. First of all, I think a number of our companies have been already working exceedingly hard on a lot of this and have achieved an enormous amount. You mentioned some of the names. The second point, though, is that how fast do you need to move? Imagine how fast you might need to move and multiply it by 1.5, at least, in terms of where the world is going to be with regard to their demands. And just think of what if it came to pass, there was a change of administration in the US. Think about how quickly a number of things might start to shift. Mm-hmm. But beyond that, the notion that clear statements are out there, that's critical. As you well identified, people are immediately going to, well, those are hollow because you didn't include scope 3 and you're being fuzzy on this and you're being fuzzy on that.
Yeah.
And the issue, I think, is to start off with a clear idea, but then very, very, very quickly, investors are going to say, I'm going to pin that on my wall, but what I'm really going to focus on is where's the money? Where's the capital investment? Where's the R&D? Where's the M&A decisions? Show me where the money's moving, and then I'll tell you whether it feels like that vision's hollow or whether you're really living up to a plan and you got a plan and you're executing on your plan. It's definitely follow the money with regard to where the investors are. And that cost of capital differential, going back to the introduction I gave, it was punishing for many financial institutions who needed extra capital, but it was horrendously expensive to achieve from the markets if the markets didn't believe where they were headed, that they were headed there strongly, fast enough, convincingly.
So you've talked about three approaches in terms of embracing the change, waiting to see what's going to happen, sort of I call it waiting to be first to be second, or just ignoring what's going on. So we've seen announcements by the Liberal government on spending for renewable power and energy efficiency, building retrofits. We've heard the Alberta government is about to make an announcement at 1 o'clock about its hydrogen strategy. Are we in the embracing change phase? Are we at the wait and see phase? Are we moving aggressively enough? Because we're already starting to see other things starting to change south of the border. For example, refineries proposing renewable diesel plants, Suncor saying, well, we're not sure, there's regulatory issues, et cetera. So how does this all, fit together in your mind in terms of how we are actually moving in one of those three approaches that you have mentioned?
Well, I'd say part of the issue that we must grapple with is that we have elements that are operating in all of those buckets.
Okay.
We have to embrace the change. We have to wait and see. And I don't know, I'm resisting. This is all too much, or I don't really believe it, or the world's going to go back to $50 oil and it's all going to be fine because they need the oil the world's developing. And I think we have elements in all three of those buckets. And the problem is that creates a cacophony. And so when people think about investing in Canada, they think about investing in Alberta, they think of investing in the oil sands, they hear that cacophony. They don't hear a unified, clear sense. Now, I am the first one to say, the difference between the systems level and the company level, of course, individual companies are going to have to act according to their realities. And their realities can be very, very different company to company. And that's fine. It's simply, if we have an ambition to be a leader as a system, we need to create an aligned system. If we have an ambition to be a leader as a company, we have to embrace the need to make this change fast. And as fast as you think you're moving, evidence recently would say it needs to go faster. If you are a company that says, geez, I don't have the resources to do that, that's fine, but it's a choice that you're making. You'll be able to maximize your cash flow for some period of time, and then there will be other consequences that start to get out of your hands. And in the middle strategy, the wait and see, I would say that one sounds like you're not making a choice, but you're making a huge choice. You're making a huge choice to delay. You're making a huge choice to let others get ahead of you. You're making a huge choice to create some of this cacophony of, do they get it? Do they not get it? Are they moving? Are they not moving? What's going on?
So just to follow on that, there's so many pieces that are going on. So the question really is twofold here. Many of the solutions take significant funding. So you need agreement on priorities and you need policies to encourage action. So the question is, there's that piece, but also who is best positioned to take the lead to get us to the execution stage more efficiently and faster? Because there's all sorts of groups that are out there right now creating this cacophony you've just talked about. Where should it land, and how do you set those priorities?
Well, I come from the private sector. I've got a bias. Everybody's a prisoner of their experience. I'd like to believe that the people that are in the business, the people that are making those decisions every day, the people that are in the markets are the ones that have the ability to be able to create the change, but they need to be enabled. They need to be enabled by the financial system, and they need to be enabled by the regulatory regime, incentives, appropriate incentive structures, the right fiscal regime behind them. And so therefore, at the heart of it has got to be private sector leaders that come together, but they need to work together in partnership with the public sector, with the regulators, and with the financial markets to create these strategies that have a higher degree of success. And that may sound absolutely crazy and absolutely impossible. Maybe it is, but I'd like to believe as an optimist and as a Canadian that's something that we can do really well. There's a definable number of players. We know how to collaborate. We have a will to succeed and to win here. And I think that there are ways to break through this logjam, break through the friction, and to create massive leadership. There'll be a bit of chicken egg of, who goes first, what goes first, how do we do that? We can solve that.
There's a lot of you don't understand what we're going through narrative as well, Alberta versus the rest of the country. And one of the challenges that we keep hearing from the energy sector is that, we're trade exposed. So how does sustainable finance support the trade exposed sectors like the energy business, which is, the brunt of this adjustment in terms of decarbonization? It's the energy sector and it's transportation are the two biggest pieces.
Absolutely. And the trade exposed notion is a big one and a very important one. But one of the important things to understand in the background, when you read through the EU Green Deal, mm-hmm. and when you read what they were talking about previously with regard to border tax adjustments, and when you read about what they say with regard to country of origin notions, then it will become really important that we actually fulfill the requirements and the expectations that they're going to have in order to sell into those markets. And so mm-hmm. what I'm trying to say is absolutely there's a reality to trade exposed, and we need to protect people if they are heading in an appropriate direction towards evolution and transformation and low carbon competitiveness. But we need to recognize it's not just a matter of subsidizing so that, it can work. It's so that we can continue to sell our product right. Ultimately, because markets are going to start to define what's acceptable to them.
If they haven't already. What about, we talk a lot about ESG. I mean, part of this is how do we measure our energy transition transformation in terms of decarbonization, and what are we looking at in terms of metrics? Is it the return of CO2, the return on a ton of CO2 reduced, the cost of the cost to reduce a ton of CO2? Where do we, where is that piece going? Do we have a sense of how you measure so you can manage?
In part, yes. Meaning things like the EU taxonomy have just sort of reached a point of fruition. Mm-hmm. Number one. Number two, expectations of bodies like the Carbon Disclosure Product, and those entities are becoming more clear. Third, there is incremental harmonization taking place between some of these disclosure bodies like TCFD on climate, SASB on sustainability mm-hmm. issues, and so on. It's starting to come together. Having said that, there's still fuzziness. It's still not perfectly clear. We have the ability still to say, here's what you should be measuring. Here from the inside, this is what's really going to matter. I understand your objective. Here's what's really going to matter from the inside. I think we have the ability still to influence that. There is, a double-edged sword a little bit with regard to emissions intensity as the primary focus, i.e. the per barrel, simply because some parts of the investment world and otherwise might say, okay, we got it. You're getting way more per barrel efficient from an emissions perspective. Another part is saying, that's all fine, show us the total. And that's part of the issue, and that won't go away.
So you're saying the intensity piece, it doesn't matter? They just people want the aggregate number.
I don't want to be construed that way. Okay. It's critical, it's central, but
that's not enough.
That's not enough. The total counts too. And then I think once you get people believing what you're saying, I think we're at the part where people perhaps are not even believing what we're saying. once you get to the point that they're believing what we're saying, and we have to be very transparent, radically transparent about this, in my opinion, so that they will start to believe what we're saying, then we can start talking more effectively about, and oh, by the way, we are the best stewards of water in the world. And the social issues, we dominate. Let's just have a look, us versus Iran, Russia. I mean, come on.
But the problem is we've been having that conversation. We've been trying to tell that story and nobody's listening.
I think in part because, again, the presumption on the E and the E related to emissions is to the negative.
Your expert panel was delivered its report. How much progress have you seen on its implementation in terms of its recommendations? I know that the Institute for Sustainable Finance has been set up at Queen's. And what else are you seeing as far as coming from the panel's report, other than the fact that the new Bank of Canada governor was a member of it?
Well, and let me also say it's for Tiff to speak for himself. And
Sure.
I think Tiff is the most professional person I know in many respects, and he will focus on this particular issue with about as analytical and professional a mindset as you'd expect. But I think he does understand these issues, and the central bank regulators internationally are starting to swap experiences and best practice, and so there is more, I believe, that will come down the pike. But your question, the answer is sort of bifurcated, which is lots, too little, and we can do a lot better, but we're doing a lot. That doesn't tell you anything. But what I will say is there's a lot of self-organizing going on around a number of these issues.
Yeah.
I think it has very significantly, again, with unfortunately too little humility, I think it has significantly affected a number of mindsets, helped, amongst many other things, to get focus on these issues. I think investment behaviors are shifting. I think we're advancing significantly on taxonomy. I think the cry for some sort of vision and pathway is getting stronger and louder. I think the question of data is being debated. I wish it were moving a lot faster. Some people are popping up with a number of ideas. I think it can go a lot further. The idea of board education, the idea of the support on the part of auditors and accountants and others that are really critical to this is starting to advance. So there's many, many ways in which it's moving. I just think we need to move a lot faster.
Yeah, it's a challenge for all of us. We're waiting to see how that's going to move ahead. Terry's back on screen. I'm going to turn it over back to him.
I'm very reluctant to interrupt this conversation because this is wonderful stuff. I want to thank Chancellor Yedlin for your very insightful questions today. I'd like to thank Andy Chisholm for sharing your strategic insight, your hard-won experience, and your compelling recommendations. I'd also like to thank Andy's internet for persevering. That was fantastic. I'd like to thank you to Enbridge for your support of these series. We support and appreciate your support of these strategic conversations. I want to thank our Hasking team for all your hard work on putting together this event. And I want to thank you, our audience. We appreciate you spending your time with us, engaging in these conversations. Thank you for all your questions. Very insightful. I'm very sorry we weren't able to get to all of them, but they were very good. And we hope to all see you at our next event on December 8th on financing green energy projects. Thank you and goodbye.